Welcome back to Alpha Recap. Thanks for joining us. Today we unpacked a busy February 12th tape that left investors juggling memory market noise, big tech moves, and a surprisingly large stack of Form 8K filings. As always, if you have questions, you can reach us at stockalpha.ai. Good evening. Markets closed mixed after a string of headlines that pushed volatility into specific tech and infrastructure names, and a round of 8K disclosures that created event risk across sectors. We'll walk through the parts that mattered and what investors should be watching next. Let's start with the standout. Bank of America flagged a modest near-term earnings downside for Apple tied to weakness in the memory market. That was the headline that seemed to nudge a lot of the component names we saw move today. Right. The note framed the hit as modest, not structural, but remember, memory, DRAM, and NAND is cyclical. Price corrections and inventory digestion at the original equipment manufacturers can compress margins at both suppliers and device makers. Micron and other component makers were among the movers as a result. I've got a quick question on that. When someone says modest, are they really saying nothing to worry about or just watch this closely? It's the latter. Modest implies it's visible in the numbers for the upcoming quarter or two, but not a permanent shift to the business model. The debate is really about inventory elasticity, whether OEMs like Apple will see a short soft patch or whether it cascades into bigger margin pressure for suppliers. And that debate showed up in the movers list. Cisco had a sharp pre-market slump, and names like AppLovin, Micron, Fastly, Equinix, Rollins, and Novacure were active. That's a pretty wide net. Software, semiconductors, cloud infrastructure, and ad tech. Exactly. Those sectors are sensitive to both macro demand signals, think hiring or corporate spending, and company-specific guidance. For infrastructure companies, enterprise spending cycles often drive the moves. For ad tech and content delivery networks, short-term demand changes are the key driver. Now let's pivot to the other big theme, a cluster of Form 8K filings. That included filings from TransUnion, First Energy, West Pharmaceutical Services, Southwest Gas, Quince Therapeutics, GEO Group, and Advanced Drainage Systems. Those 8Ks ranged from routine regulatory FD disclosures to items with potential materiality, like a termination of a material agreement and the creation of a direct financial obligation. Those filings can be quiet at first, but they're often the seed for event-driven trading and reassessments of governance and balance sheet risk. For listeners who don't live in the SEC rulebook, explain briefly what an 8K is and why it matters. An 8K is a current report companies file to disclose important events that shareholders should know about. Things like new material agreements, departures of senior executives, or new debt. Some are procedural, some are material. The devil is in the exhibits. Maturity dates, covenants, triggers. Those spell out the real risk. A perfect example from today was TransUnion, which filed an 8K that included the creation of a direct financial obligation. That can change leverage and interest coverage calculations if it's not just routine financing. Yes, investors need to read the exhibit for maturity, covenants, and collateral. Without that detail, you can't tell whether it's a routine capital raise or a response to stress. Similarly, First Energy's filing disclosed departures and compensatory arrangements, not trivial for a regulated utility where leadership stability matters a lot. Speaking of company reports, Studio City International printed a GAAP loss, 11 cents a share, on $160.3 million of revenue. That was an interesting juxtaposition. Top-line strength with bottom-line pressure. That's textbook growth stage tension. Revenue can be growing while GAAP earnings are negative due to operating costs, depreciation, or one-offs. The guidance there was clear. Investors should prioritize cash flow and forward guidance over headline revenue if GAAP losses persist. So, for growth investors, the recommendation was to stay disciplined on margins and cash burn rates. Revenue growth needs to turn into sustainable free cash flow, or multiples get punished quickly, especially in a headline-driven tape like today's. Correct. And for value or income investors, the 8Ks flagged for governance or new obligations deserve closer scrutiny. A new liability or executive churn can threaten dividends or regulatory relationships, particularly in utilities. Let's talk disagreements in the market. The first obvious one was the magnitude of Apple's memory hit. Some investors treated the BOFI note as a buying opportunity. Others saw the risk as potentially cascading into material weakness for Apple and suppliers. That's a pretty clear split on inventory cycles. And it matters for positioning. Short-term traders might prefer to trade the volatility, while long-term holders would anchor to multi-year metrics, ecosystem strength, and services growth for Apple, for example. Your time horizon dictates whether you act on a both a modest call or ignore it. Another debate was over which 8Ks were routine and which were signals. Historically, the market discounted some routine filings, but it also punished subtle cues of contract deterioration or new debt. It's a passing exercise that takes time and exhibit reading. Exactly. That's why our tactical checklist for today put reading the full exhibits front and center. Covenants, termination clauses, and any near-term cash obligations are the things that will change the story. Let's go through the tactical checklist quickly. 1. Read the full exhibits for the Feb 12th 8Ks. TransUnion, Southwest Gas, First Energy, West Pharmaceutical, Quince, GEO Group, and Advanced Drainage Systems. 2. Monitor Apple's supply chain commentary and Micron's pricing updates. 3. For Studio City, get management commentary on cash flow and non-GAAP metrics. And 4. Track reactions in Cisco, Equinix, and cloud infrastructure names for broader enterprise spending signals. 5. Governance watchers should dig into First Energy's disclosed departures and compensation arrangements to assess board alignment. If listeners are trading this, what practical tips would you give? Tight risk controls, right? Yes, short-term traders should focus on liquidity, stay away from illiquid names where 8K ambiguity can widen spreads, and use stop losses. Consider gamma exposure carefully if you are using options around memory-exposed names. Earnings surprise risk was higher today. For long-term investors, we repeated the same advice you've been hearing. Treat most routine 8Ks as informational unless the exhibits show accelerating liabilities or contract terminations that change the thesis. And for Apple specifically, consider BOFA's view as a short-term risk factor, not a long-term verdict. Institutional investors and risk managers should retest stress scenarios. A mild memory price shock that amplifies through a supplier with high leverage can create cross-market liquidity effects. Predefine how your portfolio reacts to mild, moderate, and severe memory outcomes and to a material contract termination. Let's wrap with the bottom line and 3 clear takeaways. First, cyclical component markets still mattered. Memory weakness created real near-term pressure on tech margins. Second, GAAP losses paired with revenue growth demand a cash flow focus. Revenue alone didn't settle valuation questions. Third, a band of 8Ks created idiosyncratic event risk. Read the exhibits and size positions to your time horizon. And the practical next steps were simple. Read the Feb 12th 8K exhibits, watch memory pricing and inventory metrics closely, and align position sizes to increased event risk. Whether you trade the volatility or look through it depends on your risk appetite and time frame. That's our recap of a pretty instructive day. If you want to dive deeper into any of the filings or the Apple versus memory debate, we'll be following up in the days ahead. Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Good night.